Inflation in Canada is hotter than expected, and the central bank cut rates earlier this month. Consumer prices rose 2.9% in May on an annualised basis. The market had expected an easing of pressures. The Bank of Canada was the first to lower rates amongst the G7. The ECB has similarly done it now. The BOE, meanwhile, Bank of England, held its benchmark rate at a 16-year high. Now, Monzo has taken advantage of the high rates by expanding its business, particularly its lending business, and a success so far, with the digital lender reporting its first full year profit. Revenue more than doubled to £500 million. It's about $650 million. Monzo says it was recently valued at more than $5 billion. The expanded lending has come at a predictable cost, setting aside more than $250 million for loan defaults. TS Anil is the CEO of Monzo. Good to see you, sir.
Likewise, Richard.
Let's just do the general economics first. The economy in the UK has been very tough lately. And that's made it, obviously, lending difficult, but also provision for bad loans difficult as well.
It's actually, you're absolutely right. And the slowing down of the economy, the cost of living crisis and so on has put a huge amount of pressure on the economy, but also more importantly on our customers. And actually, it's interesting that it's at a time like that more than ever, customers need a Monzo, which helps them budget, helps them plan, helps them make sense of their money and make it work harder for them.
Why? How? I mean, a bank is a bank is a bank. You take the money in, you hold it, you pay a rate of interest, you lend me when I need it, and you let me use this to buy goods. So what are you different?
Where do I start, Richard? So we're a bank that lives entirely on your phone. Right. We're a bank that is seeking
do you have a helpline?
Of course we have a helpline. There's humans everywhere. We make sure we bring the best of humans and technology to service you. So we live entirely on your phone.
Yeah.
And what we're building out is this idea of a single financial control center where all of a customer's money needs are met in a single place. And we're the UK's largest digital bank today, serving almost 10 million customers now. And if you think about what we deliver to these customers, we deliver a set of products and services that help them actually make better sense of their money, give them visibility, controls, and the ability to make smarter decisions.
You put it as you describe yourself as a tech company that is a bank.
That's right.
But I would arguably say that once you get into the banking business, the regulation and the difficulties and the requirements and the funding requirements and the reserve requirements are very different. And that can skew the benefits of the technology.
So we're happy to be held to the highest possible standards. We chose to be a fully regulated bank because we knew this industry needed to be reinvented from within. So what we're aiming to do is bring the best of technology and the best of banking together to create great outcomes for our customers, to make them experience money like they've never felt it before. What that means in practice is this idea that, so it's a simple tool like POTS, which was an industry first when we launched it. The idea that inside of a single bank account, you can compartmentalize your money and save for different needs. A salary sorter feature where the second the money lands in your account, your salary lands in your account, it gets split up into different categories and different pots that you've already created. It's things like that help you actually make better sense of your money, and in doing so, get farther along the way to your financial goals.
You've got first adopter advantage in a sense. It's been now the largest and you've been there a while, but other people are starting to move in to eat your lunch. Chase, for example, Chase UK is making huge inroads, and eventually the big four, the traditional banks, if there are still four, they will move in. How do you stay on top of them when they've got branches, not as many as they used to? They've got name recognition. Or maybe this is the new cool.
So I see this as a race, Richard. The size of the prize, the finish line, is building a global company that actually can help millions and billions of customers in time manage their money better. And it's a race between two segments of the market. The incumbent banks, the legacy banks, some of them are hundreds of years old, and whether they can transform using the power of technology, or challengers like us, technology players, and whether we can get banking and deliver on that. So will the banking industry get tech, or will the tech industry get banking is the race? And I would bet my money on us every single day, because we own the banking aspects as well. In the point I made earlier about choosing to be regulated, we're saying we will be regulated and transform this industry from within.
But you do require, to a certain extent, and rely upon the traditional banking sector for certain functions.
on the traditional banking infrastructure to the extent that
Clearing
and the payment ecosystem works in a certain way.
So you do rely on those?
On the infrastructure, not on the incumbent players necessarily. So the infrastructure that the country has, the clearing system, as you mentioned, the check clearing system, the faster payment system that exists in the UK, all of that is the infrastructure that all the banks are built on. That's not just us. Even the traditional players use that same infrastructure.
I live in the US most of the time, where, of course, the banking system could be unfavorably compared to the developing world. It's so antiquated with so many banks. But they are very good at things like Venmo.
Sure.
Cash App. They're very good at the instantaneous transactions because they've jumped, in a sense, they've leapfrogged the banking system with these digital payment mechanisms.
I love that the two examples you've given are not examples of banks.
No, they're not.
Fintech players solving a need.
Right, but they're being used by people on a daily basis.
Absolutely. And I think what's exciting to me about the US market is that customers have, in some senses, fragmented their wallet. They go to fintech company X for this one need, to bank for that other need, for another fintech company for a third need. But in doing so, that fragmentation of their money actually puts them less in control and creates more anxiety. So the power of Monzo is to bring it all into a single place and help you make sense of your money across budgeting and borrowing and saving and spending and investing and insurance, all in a single place.
And, I mean, it's cool.
It certainly is cool, and we're happy to do with where we are at right now. But the future is really what we're building out right now.
We'll talk more. I'm very grateful, sir. Thank you very much indeed.